Hello everyone, this side Sachin from Shiksha Anusthan. In this video, we will be learning about banking. What is banking? The business of receiving, safeguarding, and lending of money is called banking. In general, when the people keep money in the bank, when their income is greater than their expense, and they save some money, and this saving money they keep it in bank to avoid the risk of losing or theft and to earn interest, of course. Whereas thus bank is is an institution which carries on the business of taking deposits and lending money. Bank is an institution that carries on the business of taking deposits and lending money. The rate of interest charged by the bank from its borrowers is usually higher than what it pays to depositors. So here if bank charges loan rate of 10%, here it pays it 6%. So this extra 3% is the bank's income. In addition to money taking and money lending, the bank also performs various other functions. Almost every individual and every section of society deals with banks in one way or the other. Some other functions of the bank, main functions of the bank are receiving money from depositors. Any person who has account with the bank, they deposit money. So receiving money from the depositors. Different banks have different schemes to attract people to keep their money in the bank and by giving maximum returns on the deposit. Then lending money on demand. Lending money on demand. This means providing loans. Basically, of course, banks take deposit at lower rate of interest and lend it at a higher rate of interest. But they also perform certain other functions for the benefit of the needy. For example, they give loans at a concessional rates to the farmers, petty shopkeepers like the Mudra Yojana, educated unemployed persons, handicapped persons, widows, etc., and to help them earn their livelihood. Provide other useful services to society through the general, the public, the government. Now, this a maximum number of salaried persons are getting salaries through banks. Initially, what was there? The salary was given in hand. Now, nowadays, the companies prefer giving it through banks. It helps them keeping all the records. In big cities, the schools fees and government loans today's scenario, in this scenario where the whole country was in lockdown, all the fees and all the things have come online. The schools have all the schools now have started collecting bills online through phone pay, paytm, and we have numerous facilities right now in the country to benefit, to help us in carrying out of daily transactions. And this also banks also provide benefits to tourists and travelers, ATM cards, debit cards, etc., etc. And types of account. On various types of accounts provided by the banks, we shall confine our discussion to popular and most commonly used bank account, recurring deposit account. But still, we can know about some accounts like bank accounts. Bank accounts come in FD, fixed deposit account, then RD, that's recurring deposit account that we will be discussing, and also a savings deposit account or SD. Now, recurring deposit. What is recurring deposit? Recurring comes from two words, reoccurring. Recurring comes from two words, reoccurring. We can also call it as EMI. We deposit some easy monthly installments. EMI means easy monthly installments every month till a particular time, for a particular time period that we decide. This monthly EMI is what? It is a deposit account. We deposit easy monthly installments every month till the maturity period or the time period or the expiry period arrives, and then after that we get a lump sum, we get a maturity value on that EMI, added the interest and the time value of the money. So under this scheme, a depositor chooses a specified amount and deposits that amount every month for a fixed period chosen by him or her at the time of opening this account. The period may vary from 3 months to 10 years. At the expiry of this period, that is called maturity period, the depositor is paid a lump sum amount or called the maturity value. The maturity value of RD includes the amount deposited by the account holder with interest compounded quarterly at a fixed rate, and this rate is fixed by Reserve Bank of India and is revised from time to time. So now let us consider, let P be the EMI or the monthly installments, N be the number of months. Here time is always calculated in months. If time is given in, suppose time is given 6 years, we need to convert it into months, that is 6 into 12, that is 72 months. We cannot take it as years because it is monthly rate. Okay. Now, and R be the rate percent. So the formula for interest is I is equal to P into N. P into N plus 1 by 2 into 12, because it is calculated quarterly, and so and 2 into 12, and R into R by 100. Since the total sum deposited, the total sum that we deposit is P into N. P into N is the total sum that we deposited, because P is a monthly EMI into total number of months, so the total sum deposited, and this sum plus interest will give our maturity value. Got it? This sum plus interest will give our maturity value. With that, so now this comes, the short formula of this is P into N plus I. Now we can also write P into N as P into N and I as the formula of I, P into N plus 1 by 2 into 12 into R by 100. This can be the formula of total formula that you need to remember. But sometimes it becomes difficult to solve or cut out or reduce the fractions because of some huge numbers. We can also use a shortcut formula, like to calculate the MB. You can take this P into N as common. You can take the P into N as common, then you can directly write 1 plus N plus 1 by 2400 and their whole into R. You can solve it directly through this process. Now let us take an example. Kiran deposited 200 rupees per month. So the P here is 200 rupees per month, 36 months, N is 36 months, R is 11%. The interest to be calculated is P 200 into 36 into 37 by 2 into 12 into 1100. So this comes out as 1221. Now we know that total sum deposited is this much, is 200 into 36, 7200. So the time at the time maturity, the Kiran will get this total sum plus interest, that is 8421. You can also carry out the same through the above direct formula. I hope you got the concept. Do like and subscribe our channel for more upcoming videos. Thank you for watching.